Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 2% there on the S&P 500. Market is up across the board pretty much. We got a little less on the Russell 2000 and the banks. I think Dow and the NASDAQ is pretty similar, I believe. On NASDAQ, actually more. You can see the NASDAQ actually is up 3%. Let's see, how did Dow is 1.6 and the Russell 2000 is at 1.5 there. So you can see NASDAQ led the way to the upside today. But to be fair, NASDAQ's been getting hammered last several trading sessions. And so they're up a little bit more, but they were down more on the last couple trading sessions also. But anyway, let's stick with the S&P. Let's look at the 65-minute chart and see what we can expect going forward here. So looks like we gapped up today, right? This is where we closed yesterday. We gapped up here today. And yesterday we talked about bulls need some kind of a shenanigan gap up. And we also talked about my long-term moving average being in that vicinity. We really didn't see a whole lot of signal as far as the price action is concerned from last night's close. This is where it closed, and it was a little bit difficult to see how the market is going to behave. Are we going to see a gap down, or are we going to see a little flat open, move a little bit higher, pull back? We did realize, we talked about yesterday, that my midterm moving average is definitely the level, we want to keep an eye on potential support there, because as you can see, it does have pretty weighty resume. As you can see here, last time we talked about yesterday how we hit that long-term moving average back in late June. It went from 300 to 350 or 360 there, right? So we did see a support today with the gap up. And then after the gap up, what happened was we actually continued to move higher. That was a first hour. And then a second hour. It looks like third hour, there's a little bit of fluctuation. I want to make sure if we had that fluctuation or not. I wasn't. We didn't have that. Okay, so I just went to the cash market here, actual index. I don't see any lower wick. So sometimes it happens with the spider. So this isn't there. That's not really there. So we really didn't have any fluctuation. So pretty much, bullish all throughout the day. First hour, second hour, third hour, fourth hour, fifth hour. And then you can see we're kind of pulling back. Here's a little bit of different images that I've been actually kind of, tweeting things out. This was a couple days ago. Oh, this was yesterday, right? So we talked about this level there. And we talked about yesterday potential bullish divergence, possibly. And this was today. We found support. Look at that. There's a lower low there. And then a higher low on the oscillator. Oscillator actually breaking above the neckline, separating, continue to move higher there. And this was when the market was reclaiming my short-term moving average, continues to move higher. There was actually a down gap here, and that with that gap up today, the down gap was getting filled. And then last time I tweeted was a couple hours before market close, talked about how we want to make sure, watch this resistance here, because well, we did see a gap up. Market did move higher. Now we're getting into that, hitting with that midterm moving average, potentially new resistance there. So that's kind of what we saw here in the last hour. We did see a little bit of weakness, but it looks like, we're kind of right on that short-term moving average. So first of all, we want to keep in mind that midterm moving average did act as resistance. Last time we did see this market coming down, and now that level is acting as resistance once again. It is no coincidence we bounce here. It is no coincidence we're slowing down here, because obviously this entire day is a move from here to here. Market decided it's going to slow down there. So what I want to do is actually want to put in these two levels here, because that's a gap area. So it's going to provide support. So it was a good thing that we saw a gap up. You know what I mean? So this gap is going to provide support. So it'll be interesting to see how it plays out. Should the price continue to slide lower going into remainder this week, 337, 333 is going to be the area of support. It will be better for the buyers if that gets this gap, if they can sustain this gap. If we do see price continue to lower tomorrow, it looks like it might because of this resistance here. In the short term, we do have a lower highs here, as you can see. So I want to continue to give benefit of doubt to the bears in the short term, despite of this little rally, and neutral to slightly bearish in the midterm. So really, we did see a jump on my long-term moving average, but overall sentiment is I still want to give it still same as yesterday. Short-term bearish, midterm neutral to slight bearish here. Now that price is actually still below my midterm moving average. I'm going to talk about that more about the midterm moving average. But for now, it looks like we have a little bit of bearish engulfing candle there, and if we continue lower, we want to see the buyers holding this level. If bears continue to push it down, come and fill this gap, keep in mind right underneath that we have my long-term moving average hovering in that vicinity. That's kind of a double support, right? That's kind of a double support. So gap fills is already a support, and then my long-term moving average right on that there. So that's going to be a pretty strong support. So I think best bet for the bears is really bring it down and then maybe like a gapping it down or something like that. So we'll know more going into tomorrow. But here, I want you to look at this. So yesterday we were highlighting, right? We spent a lot of time here, right? We spent a lot of time here, and we ended a video yesterday with this. And we currently have, here, let's do this again. We currently have almost exact, very, very similar price action occurring here, right? You can see that the lower low, right? You can see that the higher low on the oscillator. You can see the lower low here, right? You can see the higher low on the oscillator, correct? You also can see my long-term moving average right on there, my long-term moving average right on there. So where are we now when we compare price action, today's price action with late June? Check out that midterm moving average. You see this midterm moving average, that blue dotted, that's right here. That's right here. So that moving average will be the key going forward. If the buyers want to continue to the upside and resume with this uptrend, what buyers need to do, it needs to get above my midterm moving average, reclaim it, stay above it, and then potentially pull back, retest it as new supports couple times, and continue to cultivate higher lows and higher highs. Right? The reason why these retests are important, because there are times where you could see some whipsawing action, right? And I think this market is a little bit more vulnerable for whipsawing now than back in June and July, because this market is extended just looking at the last 4, 5, 6 months. Obviously, S&P is up 60-65%. NASDAQ is up 70-75% since the March lows. So we're working with that extended sessions last 5 months. So there's a little bit more vulnerability today for possible whipsawing action. So what we need to see is, price. This is for possible bullish scenario. Breaking above the midterm moving average, pulling back and retesting, and then cultivating higher lows and higher highs and continuing, because we could see potentially getting above midterm moving average, faking people out, thinking this is resuming to the upside, and we may see this thing just falling right over. So we are a little bit more vulnerable for that kind of price action. So we have to keep an eye on this midterm moving average quite keenly going forward. I'll tweet things out going forward. I'll let you guys know what I see, and obviously we'll do these videos every single day, and I'll help you navigate this market, and we'll do it together. So, but the oscillator is been screaming right here, similar to here. So we're about here. Let me draw a line. So it's like this. We're right here. which is that's right there, which is right beneath that midterm moving average. That is no coincidence, right? Look at that. That's where it is. We're right underneath my midterm moving average. Look at that oscillator right underneath that my midterm moving average. So going into tomorrow, 337, 333 is the support to watch. Bears, obviously you don't want the buyers to reclaim that midterm moving average, because you know what happened last time when he reclaimed that and found support. That thing continued on. Buyers, you want to find some support in that gap area here in this vicinity. We initially did bounce on the long-term moving average. Oscillator is making its fast move to the upside. So we want to keep that, buyers want to keep that momentum going and eventually as quickly as possible reclaim that midterm moving average right here and continue to move to the upside and find support on that midterm moving average and continue to climb higher. We'll get a little bit more information tomorrow, because obviously we actually got way more information today than what we know about this market yesterday. And so each day this market will give us just a little bit more information, and with that we can continue to navigate this market and adjust our portfolio accordingly. So you guys enjoy your night. I'll come back for you guys tomorrow night. Good luck trading tomorrow.